Ladies and gentlemen, Kim here. Welcome to the market update. Hope you guys had a good day trading today. Hope you guys had a good week trading this week. Market is up today, about a 1% there on the S&P. Actually, let's check out the year-to-date numbers here, as you can see on the right side of the column, the red box here. So you can see S&P is now up 12% year-to-date. Nasdaq is lagging this year, 5% year-to-date versus some of the other sectors, and this is outperforming the Nasdaq. However, Nasdaq pretty much led the entire market last year, so it's only fair, I think, and I think it's healthy for the Nasdaq to lag, let the other sectors and the indices to catch up. And this is something that we've been talking about for almost half a year now, that Nasdaq's to cool off and let others catch up. But nonetheless, Nasdaq is up about 5% there. Dow is up 13% year to date. Semi 12. Also, semi is also cooling off this year. Last year, actually, to be precise, semiconductor sector led the entire market, actually outperforming the Nasdaq. But semi's still up about 12% this year to date. So from January till today. Russell 2000 up 15% year to date. Transport up 23%, bank sector is up 30%, energy is up 46%. And it is interesting because these guys that you see right here, these are the guys that were heavily lagging last year. So you can see, if you didn't chase, if you weren't already in what was, what already went up last year, which is and I use this analogy quite a bit. If you went long Amazon on June last year, right? That's about 6 months ago. That's a year ago. So if you went long on Amazon in June, your current gain is nothing. But if you went long on Google, FedEx, Berkshire, American Express, or any of the bank stocks, you're up 30, 40, 50% this year, or any of the transport stocks. And because, again, the market went up, only certain sectors, only certain handful stocks went up after COVID, and those hyper COVID stocks been crashing down 40-50% in the last 4, 5, 6, 7 months ago, or since 4, 5, 7 months. But Amazon, obviously, it's not crashing down. Amazon's been actually consolidating. But that's also a good thing. If you actually went long on Amazon, near the COVID lows, or if you've been investor in Amazon for the last 5, 6 years, that's the best thing you can ask for after a big move consolidating. But some of the other COVID stocks weren't so lucky, did face 40, 50, even 60% correction, some of the hyper stocks. And some of the lagging stocks, such as small caps and transport and the banks, they are making a big move this year. Biotech is pretty much flat year to date. Emerging market is up about 7%. Gold is up about, or negative 2% year to date. Silver is up a little bit. Oil's up about 42% this year. Treasury or dollar is pretty much flat. Treasury bond is negative 12%. VIX is negative 20% year to date. Miners, though, is up 6%. Grayscale Bitcoin is pretty much flat year to date. However, Grayscale Bitcoin is coming down 50%, 50, since the peak in the last couple months. So tonight, in this weekend analysis, we'll be sticking with Spider, Qs, GDX, and Grayscale Bitcoin. It is all coming up right now. All right, so let's go back and follow up on our 65-minute chart analysis, which we've been doing every single day this week. And there's certain things I want to talk about real quick here. First of all, something that we talked a lot about. I don't know. I've been talking about this for more than a year now. Benefit of the doubt, right? You hear me saying it so many times, and you hear me saying it so many times that there's always going to be short-term fluctuations. And so if anybody chased it long right here after this gap up, right? Instead of going long at these lows when things looked more hectic, they waited all this time, and then they started going long after you see this thing gapping up here. Well, this real quick downturn here, that was there just to get those people out, just to punish those chasers, just to rattle people out, because we saw a gap down right here that became the proverbial bottom, and you can see how quickly made that move. So what we have to understand is in the short term of things, market is going to give you some shenanigans, market is going to give you some fluctuations, market is going to give you some gap ups and fade gap downs, all of that. This is why it is imperative, it is extremely important you understand overall trend of things, right? This entire week, as I was analyzing this 65-minute chart, right? We continue to stay bullish in the midterm. Hey, in the short term, the micro term, yeah, sentiment changed to bullish to bearish, but in the short term, to midterm, we firmly stayed bullish. Maybe we're neutral, but we never really went bearish. As long as we stayed above my short-term moving average, we're bullish. Even yesterday on the last night's video, I never went bearish. I never said short-term, I'm bearish. I said short-term, I'm more neutral. But in the midterm, I'm bullish because we do see that higher highs here. And now we're in a discovery mode, right? Price discovery mode to find out where that higher low is going to be, and market decided. Not me, not you, not anyone else out there. Market decided that this is gonna be that higher low, because after that move here, we gapped up, and that's the best case scenario. We talked about that on the last night's update. Also, that the most smooth transition to the upside to print new all-time highs will be gap up, because there was a gap down here that was slightly open yesterday, and there's a resistance in that vicinity. So by gapping up like this, you can see how smooth today's run was, right? That's because we saw gap up. That's what I call jumping over the fence. I specifically talked about yesterday, if we see a gap up, we'll have a smooth transition into the new all-time high territory, right? If we didn't see the gap up, you know what? We would have got up here and filled this gap, and then we would have grinded all day, or potentially even getting back down, and maybe even some of the short-term moving average acting as resistance. By gapping up here, we didn't have to deal with the resistance, and this is the reason why all day long we saw bullish rally, right? First hour, second hour, third hour, fourth hour, fifth hour, sixth. We didn't have not one red candle today, entire day, thanks to that gap up. And also not to mention that we are still in a midterm uptrend. We also talked about yesterday, this gap is going to be known as a breakaway gap with the island bottom reversal. This gap is going to be what? Continuation gap. Also, we talked about we want to favor the buyers because bears fail to fill this gap. Because of it, the gap still remains. That's going to favor the buyers. We saw another gap up today. Now you can see that we got 3 gaps that is sustained, that is still open. We want to continue to give benefit of the doubt to the buyers. Should there be any kind of slide next week, you want to check 420, right? That's the gap area. Also, my short-term moving average is residing in that vicinity. I think the short-term moving average is ready to support the buyers once again if we do see any kind of pullback. Let's check out that oscillator here. First of all, I do want to talk about this oscillator. We did see, talked about this yesterday. If we do see this oscillator needs to get above this resistance, otherwise things gonna get hectic. Well, we did that today. Both of these slow line, fast line, the oscillator right here, the oscillator lines, they both broke above this falling resistance. And we talked about once we see something like that, the market is probably gonna be at all-time high level. We did that, and we're not fully overbought. We are in this level here now, but there's still a little bit of room to move if buyers so choose to push a little bit further to the upside. But what I really wanted to talk about is this. Last time we saw something similar here. I'm going to show you some real quick. This is going to be important because potentially Spider might be going into 460. I don't know when, but as far as this trend is concerned. So you can see that that's what I call a oscillator higher low. Once you see the oscillator cultivating higher lows like this, That's when the momentum is starting to build. The buyers are taking control of the trend and ready to thrive. And that's kind of what you see here. Last time we saw something like that was back in March this year, which was 3 months ago. And then we saw that mid-March and then late March. You can definitely see that there's a clear, right, definitive higher low. Nothing elusive about it, right? So with that, you can see we also saw lower higher lows and higher lows and lower highs here. So there's energy was building, right? There's a battle going on, right? Bears are trying to make this into a downtrend. Bulls are trying to make this into an uptrend. There's a battle going on, but you see that I put that circle there. Once we saw that breakout, that energy was built up, it has released to the upside, and that's right here. Once this thing broke out, that's right here, right? Once that happened, what happened, right? What happened? This thing made a move here. And I did a little Fibonacci here. You see that that's the peak, that's the low. It came down to where? 50% retracement. That is not a mistake. That is not a coincidence. It is not a random occurrence, right? That's the level that is coinciding with my midterm moving average and market bounce in that vicinity. Obviously, man, it could have done anything, but why was that the pivotal low before we saw a big move here, right? Because again, energy built up, my oscillator is breaking out, we got midterm moving average, 50% retracement. Not to mention, there's a gap area here. I cleaned that gap here because I wanted to make my chart a little bit more clean, but there's a gap. So you can see we got 50%. We got the midterm moving average. We got the gap area support. We have the oscillator breaking out. Not to mention, in the midterm, that's the vicinity of higher low. And we saw a big bullish run. It went to where? 200% expansion level on my fib here. So I took the liberty to do a similar analysis here. That's the peak. That's the low, because that's where that run came about. Analyze it right here and here. Guess where we found support? 50%. Wait, when was the last time we found support? 50%. It is not a coincidence. It's not a mistake. It is not a random occurrence. Not to mention we have my 50%, not 50%, the midterm moving, I got too excited there. Midterm moving average there, acting as support twice. It is not a mistake. It is not a coincidence. It is not a random occurrence. On top of that, we have oscillator breakout. Again, because the energy was built up, right? We got the lower highs, higher lows. Energy was built up. Energy just got released today to the upside. So, unless there's some crazy shenanigan to the downside, if everything works out well as far as trend is concerned, based on this analysis, there's a good chance we'll get to about 460 with the 200% expansion Fibonacci target there. That does not mean we're not going to see day-to-day fluctuations, corrections, up and down shenanigans in the short-term sense, because there will be. But if you look at things in the mid-term sense, potentially that's where it's headed. So I think this is looking pretty good here going into remainder of this month and possibly even next month here, but let's take it day by day. Trend is up. We got a lot of the energy just got released. The oscillators broke out. We got these three gaps still open. All my short term and mid-term moving average is rising, and market is ready to cultivate new highs there. So looking good for the buyers. Long-term investors, if you didn't get caught up in these shenanigans to close out your longs and get trapped, because if you pay way too much focus in the short term and the micro term, market will get you out first before making a move, and you get mad and trying to short it. You know what? You're just not gonna have any fun in this market. So let's continue to look at and approach this market in this way. And we'll obviously, analyze this market every single day and see if we can hit that target going forward. Let's go back to the daily chart here. So quickly looking at the daily chart, if you guys remember back in, early May, mid-May, we talked about that pivot. Also, what do we talk about? We talked about that my midterm moving average on the daily chart. Keep in mind, my midterm on the daily, midterm 65-minute chart, they're different moving average settings. So you can see you want to give benefit of the doubt as long as we stay above it. So when this thing came down here, guess what happened? We came down and retest this level, and then you can see how we bounced. It's not a mistake. It is not a coincidence. It's not a random occurrence. I mean, it could have bounced anywhere, maybe in between. Why did it chose here? I don't know, right? None of us do. But just like how we are as a human being, we're predictable beings. We tend to do things in a repeatable manner, right? I mean, in the summertime, you go swimming, or you do certain things. On the weekend, you go out and do, you know what I'm saying? So the market doesn't mean always, right? But if you look at the market overall basis, it's gonna tend to repeat in certain manner. Doesn't mean it's always going to repeat. Sometimes it's going to change it up, because you might change it up, right? You might, I don't know, you maybe every Friday night you used to go out and get a pizza, right? Every Friday night, like maybe 4 times, whole month of May, that's what you did. On Friday night, you got a pizza, right? But maybe tonight, this Friday night, on June, maybe you said, you know what? I'm going to get a hamburger this Friday night. So you have to understand, market tends to repeat for a while until it doesn't repeat anymore, and that's why pivots, supports, and moving averages do work, right? So you can see it's pretty much this entire year, because this is January, entire year. We wanted to continue to give benefit of the doubt to the buyers as long as we stay above it, and that's the level coinciding with that rising pivot. It is not a coincidence. It is not a random occurrence. It is not a mistake, right? And then you can see that we see a little double bottom here, got back up, and you can see again, that's that horizontal prior resistance. You can see how this market continues to respect these technical levels, right? You pull back a little bit to what? To retest this, because that was a prior resistance as a new support, and we see a bounce here. My short-term moving average could continue to rise here, so we're going to continue to give benefit of the doubt to the buyer. There's so many attempts been made since COVID lows, right? So many attempts been made since COVID lows. So many people trying to short this. So many people thought there's going to be a second wave crash. So many people thought that the election, if Biden wins, that it's going to crash. So many people thought that this thing is not sustainable. There's going to be a crash. Oh, this thing is up too much. It's going to crash. Everybody's been wrong and missing out on the biggest opportunity. I mean, this is the biggest buying opportunity this market has ever created in the history of stock market. I hope you guys know what I'm saying. I'm not exaggerating. Truly was the lifetime buying opportunity, because we've never seen stock market comes down this much and goes up this fast. In that category, how rapid, how fast, how expedited it was, the recovery and the rally. This was truly the biggest buying opportunity, lifetime buying opportunity this market has ever produced in the history of stock market. And every short attempt, every crash attempt, every kind of analysis that this market is not sustainable, everybody's been wrong, ignoring its trend and overall trend, right? So we're here. We're at 420. Can you imagine, just about a year ago, we were trading at 200 or so. We're now at 420, 260, right? Isn't that crazy how fast this market can change, its sentiment, right? Also, we have to understand this market can stay irrational more than you can stay solvent. Do you know what that means? Excuse me. That means this market, the laws of physics do not apply in this market. Just because it's already up too much since the COVID lows does not mean it cannot continue to go higher, right? And so it would help you if you can understand the macro and the secular trend of this market. It will help you to navigate through up and down fluctuations and not let this market bully you around on every stupid shenanigan pullbacks, right? Calling it a turmoil. The market is crazy. Oh, market is acting up. None of that is true. It is very much normal market movement. So I want to continue to give benefit of the doubt to the buyers. As you guys know, I'm not a day trader. I'm not a swing trader. I'm a long-term investor and a position trader. So I trade longer term. Even when I trade options, they're longer term options. I hold stocks and index funds and some of these leverage ETFs much longer because I want to be part of big rallies. You know what that means though? That means I am willing to go through these kind of drawdowns, and not only that, when I see an opportunity, I accumulate more on a pullback. I never chase stocks, entries ever, but when I see the pullback, I always look for opportunity when there's fear, and then when there is too much greed in the market, I look for opportunity to close out some of those positions. There's a reason why on Grayscale Bitcoin, several months ago near the top, I closed out all of my Grayscale Bitcoin shares before this 50% correction, which we'll talk about. Let's go to Nasdaq here. So we talked about this last weekend video that that rising uptrend support, that's obvious, that's ideal support, but sometimes, more often than not, it doesn't. But I feel like right now, so many people are doing. People don't want to miss out anymore because I think psychologically speaking, I think what we're seeing in the stock market is that so many people missed out huge rally. Look at that. I'm interested in Nasdaq. Look at this. It's crazy, right? I mean, this COVID decline, that looks like just normal correction now after how much, because the chart is skewed now, because this looks like nothing now after what you've seen. I mean, did anyone expect to see anything like this? And a lot of people thought that that's a double top, right? This thing's gonna come back down. It didn't. A lot of people thought that's a double top. It's gonna come back down. It ain't, right? And then now you can see that this support, right? That's right there. Sometimes market do respect these levels. More often than not, market likes to throw shenanigans in here, like maybe, break lower just to create a little bit more panic before getting up though, right? So you have to understand that sometimes it does, sometimes it doesn't. But this time around, market decided it's going to respect it. And then we're seeing a bounce, and we saw the gap up today. And with that, today's bullish move on the Nasdaq, we're now back above both of my short-term moving average here, short to mid-term, and then my long-term moving average actually got retested here and here. That blue moving average there. So we did see bigger corrections on the Nasdaq compared to any other large indices, and that's a good sign because Nasdaq's been on a tear for entire year last year after COVID, and so it's a good thing that it's seeing a bigger correction, and now you can see today we are led by the Nasdaq. And it's also good to see a Nasdaq is leading again, and I like to see Nasdaq making some big move here going forward as the S&P, as we analyze at 65 minutes that the energy has been released, and not to mention, I look at this as a consolidation move, correcting through time so we can reset some of the excessiveness in the market and then make a run. Some of the reset some of the excessiveness and then make a run. Also, if you look at my, weekly chart, some of the weekly oscillators were near the overbought level. So what this helped to do was that weekly oscillator to reset from the overbought level to back to oversold before making a run. So, even looking at the Nasdaq, things are setting up here, I believe. Market is, I think, ready to make a move to the upside and get into potentially smooth rally with short-term, micro-term fluctuations and even some shenanigans along the way. Trust me, some of those short-term, if you put too much attention to the short-term, micro-term price action, you will become a victim of this market will bully around, and make sure you're out before this market actually get into a big rally, right? Probably a lot of people got either stopped out, closed out their longs, and missed out this rally, right? And market moves in such a way that by the time you realize, oh my gosh, we're up here, and you realize you missed out the entire move. Isn't that true, right? By the time you realize where the market is, right? Even just looking at it from COVID, right? It moved in a way that you thought, oh my God, the market is up so much. Remember back in April last year, 2020, people saying the Nasdaq is up too much and saying stuff like that back in 230s. And look, where we're at today, 342. Right? Market is well capable of performing unthinkables. Unthinkable, right? Laws of physics do not apply in the stock market. Let's go to GDX here. So GDX is looking pretty good. We're seeing a pullback, and that's healthy, I think. Because we made a nice run here, and you can see faithfully this market has been on cultivating higher highs and higher lows. But I think what's most important here, looking at things more about midterm, is that you can see in the midterm we got these lower highs and lower lows. You can see this is the first time since this entire downturn, right? In the midterm, this lower high has been captured with the what? Higher high. So now what we can say is this could potentially be that first higher high before making the higher low. I mean, you don't have to come down this much. It may not. I don't know. It could be even here. But what I'm saying is, with that cultivation higher high, I think the next objective is that, going up here and reclaiming that, and then continue to build that higher low, higher high. So I think things are looking good here. And I've talked about how, that this is a good level to accumulate on gold, silver, and the minor. This is is important, major pivot. It is not a coincidence. It is not a random occurrence. It is not a mistake that market decided to bounce here, right on this level, right? So obviously sometimes it's never going to be an exact level, but this is a vicinity's important level, right? This is definitely important level, and that became, so far we can see that that's important low, because that's where market made a move to the upside, GDX, and cultivated it for the first time, that higher high there. So I think sentiment start to shift, looking more and more bullish on GDX. So let's look at Grayscale Bitcoin here real quick. So we talked about this on the last weekend analysis. Grayscale Bitcoin faced the biggest dooms this market has ever faced in the history of stock market, right? Faced 1929 Great Depression in 2019, and then faced the dot-com bubble crash in 2020, and currently facing financial crisis of 2008 this year. The biggest financial dooms Grayscale Bitcoin is facing every single year back to back. No wonder people are in this space. They're always just going crazy every single day. Right? Because this is kind of the crisis and chaos these people are going through, right? It's like, oh my God, they're getting in, getting out. It's like, oh, making money, losing everything, right? How many people lost everything chasing after here? Boom. How many people lost everything? Boom. How many people, right? So I don't know why Bitcoin is such a huge deal. Market always follows the majority. So if you're constantly chasing after things that everybody else is talking about, especially something like Bitcoin, because you want to make money quickly, well, what's going to happen is if you're going to treat this market like a casino, you're going to get a treatment like casino, which means you're going to have less than 5% chance of winning overall. You might get lucky at some point and you make some money, but the longer you play, in Bitcoin, the more you're gonna lose. And also it makes you vulnerable. You get so desperate and needy. There will be scammers, these crypto teachers, crypto masters, cryptocurrency, trading systems or trading courses. All these bozos out there is just gonna try to, take advantage of your vulnerability, not understanding how the crypto works and asset class like this, right? And as I told you guys that I was a lot of my longs on Grayscale Bitcoin that I went here, right? So this is because of too many attentions that the Bitcoin was getting, And as soon as when that happens, because you know what, most people, they don't go long down here when there's fear. Most people, they wait until there's a lot of demand, and then they start going, they start chasing at the highs, and then likely the people who know what they're doing, they're gonna close out their longs with too much hype, and then you're gonna become that sucker and getting hit with that. So again, I haven't gone long since I exited all my longs on Grayscale Bitcoin, and I don't have any inclination as of today to be part of this unless this thing really crashes back down to somewhere here. But looks like though, if you still want to know where we're at, looks like this gap is holding currently there. But look at all these down gaps that are open. And the longer these guys stays open, the worse it's gonna be. And yeah, it's not looking good. All this moving average is falling, and currently a trend is down in the short to mid-term. And so we want to give benefit of the doubt to the sellers in both Bitcoin. You guys enjoy the rest of this Friday evening and rest of this weekend. I'll come back for you and see how this market is behaving in the coming week and the weeks. We'll go from there. You guys have a wonderful weekend, and good luck trading next week.